Παιδιά, τέλεια, τέλεια. Ευτυχώς είμαστε live. Είχαμε μια καθυστέρηση, περίπου ένα δεκάλεπτο. Να απολογούμε σε όλους που καθυστερήσαμε το σημερινό live. Λοιπόν, ονομάζομαι Ανδρέας Φεσάς. Για 25 μέρες θα κάνουμε live stream μαθήματα για διάφορα θέματα cryptos, investing, συνάλλαγμα, forex που θα μιλήσουμε σήμερα, e-commerce, business, επιχειρηματικότητα, πάρα πολλά θέματα. Μπαίνουμε γρήγορα στο μάθημα γιατί έχει ξεκινήσει ο καθηγητής τη διάλεξή του. Μείνετε μαζί, πάρτε το σημειωματάριό σας, γράψετε notes. Είναι πολύ σημαντικό να μάθουμε και θα μιλήσουμε σήμερα για harmonics, patterns και trading σε forex. Πάμε να αρχίσουμε. Κάνω share screen και αρχίζουμε δυναμικά.
You can trade indices, which are top performing company stocks in multiple different countries around the world. France's top stocks, Euro's top stocks, Australia's top stocks, China's top stocks, America, Japan's top stocks, Germany's top stocks. All over here you can trade. In addition to that, if you want to trade commodities, soft, hard, you're looking for oils, you're looking for gold, you're looking for natural gas, silver, different things like this, more volatile markets. You can trade indices, which are top performing company stocks in multiple different countries. Now, I want to take you around the world. France's top stock. I want to be able to take you guys through how we trade on this harmonic scanner. We have helped develop over the many years that I have been trading. We have developed many different strategies to be able to better use this algorithm. Because while this algorithm is amazing, there is nothing that is perfect. Nothing in life will ever be perfect. There is nothing without flaws in life. And the harmonic scanner is the same exact way. If you look through the harmonic scanner, and I'll just randomly browse through some pairs, you will notice that some of these trades are able to hit the entry line and are able to go to the ideal goal areas, which are the points of profit. These are areas meaning that if the scanner developed itself at this point and took itself to this point, then there was a profit to be made in the market. So without any strategy, without any thinking, you'll see that many of these patterns execute flawlessly inside of the market. But not all patterns execute flawlessly. There will be some that will not be good and will end up going to the invalidation level, which means it's just not a good pattern. So let's take a look, right? We're looking at oil. We have gold. This was another good pair. We have copper. This was a good pair. We have another US oil. That was a great pair. Okay, these are all good. You have gas. That was great. And you have silver, and silver was not so great. So you see here, out of all of these pairs, a few were good. One was not good. As we come on over to the regular Forex pairs, you will notice that there are more pairs. NZD CAD, this was a good pair. USD JPY, this was a good pair. GBP AUD, this is currently a good pair. Let's keep looking at this thing over here. AUD JPY, this was a previous markup. But from the current scan, this is getting ready to be a good pair. EuroCAD right over here. This was clearly a bad pair. See how this one went up to the stop loss level? Okay. We look at Euro JPY. This was a good pair. AUD CAD over here. This used to be a good pair here, and now it's a new pattern that is right at the entry. So as you begin to scroll through these markets, you will notice that there is a lot of opportunity over here in the market. And most of us, when we're trading, we're playing double dutch, and we're always asking ourselves, well, if the ideal goal in the market is to simply buy and sell, if we want to simply look for buying opportunities, and we want to look for selling opportunities, and we want to look for buying and selling opportunities and buying and selling opportunities, if that is our goal, if in order for us to be qualified as a true trader, okay, stick around, Gladys. So if our goal as a trader is to simply find the best areas to sell in the market to make a profit, and to find the right areas in the market to buy to make a profit, if that is our goal here as a trader, then that means that there's only two choices that we can make. We can either make the decision to buy in the market to turn a profit, or we can make the decision to sell in the market to be able to turn a profit. That is the ultimate decision that we have to figure out and that we have to get good at. Okay. Now the harmonic scanner will help you increase that probability of your success inside of the market. But just like many things, because it's not perfect, what we want to do, this is what I like to tell the people that I coach in trading. I want you guys to think about, and I'm going to show you a 3-step strategy. It's a very simple strategy. But I want you guys to think right now. I want you guys to think if you were a major professional sports team. And I want you guys to type any type of sports that you like inside of the chat box. Any sport that you like. Do you like soccer? Do you like football? Do you like baseball, right? The main objective of every single sport, I like football. So the objective of sports is that when the offensive is on the line of scrimmage and they are ready to score a touchdown and they are looking at the field, I am the coach, and this harmonic scanner, this is the field. And the coach is thinking, how do I get to score the goal? How do I get from here to that goal line to be able to score a goal? So what does the coach do? The coach opens up his book and the coach starts to look for a strategy, and not any strategy. The coach is looking for the right strategy. What is the right strategy that's going to help get my team from here to the goal line so it can be able to score a point? And that's what we're looking for here. We are the coach. This is our field, and we are looking for the right strategy to lay on this harmonic scanner to help us pick the right patterns. Because remember, some are not going to be good. So how do we avoid those bad patterns? And how do we validate the good patterns here in the market? How do we do that? Well, we do that by having a good strategy inside of the market. So as of right now, what I'm going to do is I'm going to show you guys a simple 3-step strategy that I have been following that has allowed myself and many other people to be able to see some success, and hopefully it will be able to work for you as well. Now, the strategy that I'm going to use over here is something known as a smart money strategy. When it comes to trading in the financial markets, there are multiple different ways in which you can perceive and understand the market. Now, when you begin to truly understand the market, you understand one major thing. At the end of the day, there are 2 major players. There are the whales, who are the bulk of the money inside of the market. And then there are the retail traders, which are us. And if you put together the millions of retail traders around the world that are day trading in this market every single day for an opportunity to turn profits and be successful, if you put us all together and you put all of our money together, we still make up less than 5% of the total 7.7 trillion and growing market cap that's being traded in here. Majority of the money, this is all public information that's taught in our academy and some of it online sporadically. You'll notice that the banks are the major players inside of the market. And the banks are going to move the market and move the economy where they see fit. So our job as a trader is not to try to be right in the market. Am I going to be right selling? Am I going to be right buying? No. Our job is to be able to understand where are the banks getting ready to move the money inside of the market. If you can come to terms and understand this institutionalized style of trading and understand where is the banks want to move the money, you can then ride on the coattail to the banks and then potentially find yourself in a great situation. So we want to be able to put 2 styles of trading together. We want to be able to put together God's math. We want to be able to put together these harmonic patterns, and we want to be able to validate these harmonic patterns with institutionalized trading. And by putting these 2 concepts together, you will have a strategy that you can use that will help you validate and pick out some of the most profitable patterns that could potentially put you on the right side of the market day in and day out. And this will happen with a little bit of training and a little bit of practice. So let's get ready to actually show you this 3-step smart money trading. Now, what I'm going to do is I'm going to go down to a former pair. that we had already used that allowed us over here to become profitable inside of the market, right? And I'm going to use, I wanted to use this GJ, but I can probably use some other pairs right over here. I can actually use this one over here. So we'll come over here and we'll simply use AUDJPY. Okay, AUDJPY is by the entry and it's making its way on up to the first take profit. So let's take a look and let's figure out, how do we use this? So when it comes to trading in the market, this is what you want to know when it comes to trading with this particular strategy. Now, this is known as our SmartMonix strategy via the harmonic scanner. Okay, it's a smart money trading strategy. And this strategy is based on 3 simple steps. So I want you guys to take notes, especially if you're guests, right? So step 1 is you want to find the zone. You want to find the liquidity. You want to find the liquidity zone. You want to find the exact zone of where all the money is sitting inside of the market. So that way you are trading, you know, you're on the right side of the market. You have the right order flow. The second part of the strategy is to be able to identify the shift in momentum, which is the exact candle. So let me correctly put identify, right? The second step is to identify the shift in the momentum, to find the exact candle of when the market is going to get ready to go in the direction that you would like the market to go. Okay. Institutional floor trading, they call this footprint. So we're going to show you a way of how to understand early footprint inside of the market. Okay. And then the third part of the strategy that we're going to talk about today is to simply find the FBG entry price, which is basically finding the exact price points to enter the market. So this 3-step strategy here is going to give you 3 key components. It's going to help you find the right zone. It's going to help you find the right candle. And it's going to help you find the correct entry price for you to be able to potentially execute a trade inside of the market. So those are going to be the 3 steps here. So let's take a look at step 1. Okay. Very, very, very easy. So step 1, to identify the zone, what you're going to want to find is you're going to want to find something known as the OB. Okay. You're going to want to find the zone of liquidity and order block zone. So let's talk about this over here and how exactly do we find an OB? How do we find that? And the OB is our liquidity pool. It's where there's it's going to be the exact zone where there's going to be, out of all the areas that the market moves, it's going to be the exact zone where there's going to be the maximum amount of money sitting at that particular zone. Now, why are we looking for that zone specifically? Because I want everybody to know that in order for the Forex market to move simply 1 pip, okay? In order for the market to move simply 1 pip, all right? That's the equivalent of 10,000 lots that need to be traded, which basically equates to about $100,000 to $1 million that needs to fluctuate and change in the market for the market to move 1 pip. And when you guys, for those of you that trade, you know, you don't want the market to go 1 pip. You want 10, 50, 20, 30, 40, 50, 100 pips. You want a lot of pips, right? More pips equal more money, right? So if the banks want to be able to make a move, the banks are not looking to make small little moves like this in the market. Every time the banks come in the move, the market, the banks are looking to make big moves like this in the market. So we want to find those zones of liquidity where there's going to be the most amount of money, where the banks are more than likely to get in. So there could be big moves inside of the market. Okay. No, I did it. So let's talk about this. Let me come over here. Now, give me 1 second. Okay, so let's take a look at how this is going to work out over here. So the first thing that we're going to look for is we're going to look for our liquidity pool. So this is what we're going to do. What we're going to do is we're going to take a look at the market. This is going to be step 1. Step 1 is we're going to look for the market to either be in an uptrend for, or we're going to look for the market to be in a downtrend. So let's take a look. Or we're going to look for the market to be in a downtrend right over here. So let's take a look at how we're going to find this. And I'm going to show you on the chart. It's very, very simple. So whenever the market is traveling and the market is moving, the market likes to make a high point. This is the maximum area where the price has reached. And from here, the market will begin to cool off down inside of the market. Now, once the market cools off, there is going to be a zone that this market creates right over here. There's going to be that zone right over there, which that market creates. And that zone, that is the high zone right over here in the market. In order for the market to continue uptrending and going up in the market would need to break that previous high inside of the market. So once that market breaks that previous high right over there, and we see this happening inside of the market, we can then look for our liquidity pool inside of the market. And I'm going to show you multiple examples. So when the market makes a high again and pulls back, the market's going to leave a zone right over there. And one more time, the market is going to need to break above that zone right over here and continue going higher, okay, to continue its uptrend. Now, whenever we see this happening, what we're going to do to be able to find our liquidity pool is we're going to go backwards from where the breakout was at, and we're going to go to the very, very start of the move. The very start of the move that caused the previous breakout inside of the market. That right there will help you understand where the most amount of money is sitting inside of the market. And when you look at the market, there will be multiple zones like this. So every time the market breaks what we call a previous high, right over here, the market comes back and boom, that's where our liquidity is going to be. And it will be the same in a downtrend. If the market pulls back and breaks the low, our liquidity pool will be right up there. If the market comes low, pulls back and breaks the low, our liquidity pool will be right over there. So this is what it looks like to be able to find these liquidity pools. So I'm going to show you what this looks like inside of the market. And this is the most important step of all. So let's take a look. Ready? So let's say we're looking at this harmonic scanner. The first thing that we want to do is we want to, make sure that the harmonic scanner has came to the entry line. Now, this is just short of the entry. So you normally want the harmonic scanner to hit the entry line. So that way the algorithms, everything is filled out correctly. Now, once the market's at the entry line, what we want to do is go right to step one to validate, well, does this entry have a pool of money sitting here where this market can make a big explosive move? So what we're going to do is we're going to scroll on back and we're going to look at the previous market. So if we take a look at this previous market, let's take a look. Let me know if you guys can see it. We can see here that the market the market went high right over here. Let's take a look. We can see the market went high. We could see that the market here pulled back. And once the market pulled back, here was that last previous high. And this is what we call a break of structure right over here. Okay. And when this market, let's take a look. When this market came above, right over here, when this market finally came above and broke out that previous high, we're now able to come down here and look for our liquidity pool. Does that make sense to everyone here? Okay. Does that make sense? So what we're going to do is we're going to do this. To find this liquidity pool, we're going to go right down to that bottom of that move, and we're going to look for two different things. The first thing we're going to look for is we're going to look for the candle, the first blue candle that started that uptrend that caused that breakout inside of the market. So as we can see right here, this right here was the first blue candle that caused that breakout right over there. And now what we're going to do is we're going to come to the candle right before it, right? We're going to come to that candle right before it, which is this red candle right over here. And now we're going to highlight this candle from top to bottom, and we are going to make our liquidity zone right over here inside of the market. Boom. This is the ultimate level of support and resistance in the market. These are some of the best key areas that you can look for price to turn in the market in your favor. So now that we have step one, we want to simply come over here, and all we want to do is make sure that the market is entering, has hit the entry zone on the harmonic scanner, and that the entry zone is also in our liquidity zone. So if you guys can see that, if that makes sense, that's all step one is, and that's the most important step to the strategy. So that is step one. We have found the liquidity zone. Now, what is step two? Remember, guys, this is real strategy trading over here. What is step two? Step two is now looking for the footprint inside of the market. So remember, step one was finding the liquidity zone, right? Step two is to find the footprint inside of the market, okay? To find the footprint inside of the market, right? The exact candle. This is something that we call the confirmation candle inside of the market. This is the confirmation candle inside of the market, right? We want to find, once the market comes to this entry, well, guess what that means for us? That means that the market must, in order for this pattern to be valid, it means that the market has to immediately stop somewhere in this area, and the price needs to start reversing to make its way towards the ideal goal areas. Because if it continues to keep going, then, then there's no entry. So we have to help identify, we have to find the exact candle, the earliest candle where we could say, hey, something has changed. The price has shifted. The price is changing direction and getting ready to go in the direction that we want it to go. So how do we find that confirmation candle? Well, the confirmation candle is very simple. The first thing that we're going to do is we always reduce our time frame by one time frame. Right? We're going to reduce our time frame by one time frame. Very simple. Now, the next thing that we're going to do is we're going to come right down here to the time frame, right to the entry area. And the first thing that we're going to look for is we want to find our confirmation candle. So the first thing that you want to look for is you want to look for where there is an arrow crossing over the blue line. This is all color coded at this point. You want to find the arrow crossing over the blue line. So we can see that there are two arrows crossing over the blue line. We have one arrow crossing over the blue line here, and we have a second arrow crossing over the blue line here inside of our liquidity zone. So there were two different entries inside of this market. So what we're going to do is we're going to focus on the first entry and see if this entry was valid. So when you see this blue arrow crossing over, this is an early sign that the price is beginning to shift, in the direction of the trade. Now, the second thing that you want to do is we have some additional indicators right down here. And these indicators right here are going to give you a confirmation to let you know that this market is in alignment. Now, I'm going to give you guys a clue here. And most people do not know this. So get ready for this bar. Did you guys know that there's only 4 types of indicators in the entire world? There are momentum indicators. 2, there are volatility indicators. 3, there are volume indicators. And 4, there are trend indicators. I want you guys to understand this. There are hundreds of indicators that have been developed and created all around the world on multiple trading platforms, and they're all just fancy tools and toys that are all telling you the same exact thing. Every single one of these indicators fall under one of 4 readings. Because what is an indicator? An indicator is indicating what price is doing. So if you want to be a true day trader and truly be able to forecast the market, you have to understand what direction is price going in, and then you can use indicators to indicate your entries and help you understand that the market is going to go in your favor. So indicators are a great helper, and there are some phenomenal strategies that are very complex that are built on multiple indicators, right? But anyway, so if you want to be able to find an early footprint, an early change of direction in the market, you want to be able to have confirmations on all 4 types of indicators. You want a momentum confirmation, you want a volume confirmation, you want a volatility confirmation, and you want a trend confirmation. You would need all 4 of these. And these proprietary indicators that we have over here, the exact settings, the exact indicators are designed to help you identify all 4 of those readings in one single candle. So once we have step 1, which is the liquidity zone, we go to step 2. So let's take a look at step 2. If we have a blue arrow crossing over the blue line, we're going to want to look down here and make sure we have a blue bar. Check. Then we're going to look down here at the 3rd indicator, and we're going to want to make sure that the blue line is over the red line. Check. And now we're going to want to go to our 3rd indicator, and we're going to want to make sure that the blue line is also over the red line. Now, is that a check? Family, is the blue line over the red line in this example right over here? Can you guys type that for me inside the chat box? Let me see if anybody knows. Does anybody know? Is that blue line over that red line? Absolutely not, right? So that means that you are at risk because everything is not all checked off. So this is a good setup. This is a good setup, but this is not a perfect setup. It's good, but it's not yet perfect. So let's come over here and let's check out our 2nd entry. Okay. And now we look over here. We have our blue bar. And if we see here, this bar is red. Good setup, not perfect. If we come here, we see our blue is over our red. That is good. And if we come down here to the final step, we can see that our blue bar is crossing over our red. So we have a good setup. And now this black bar, we would ideally want this black bar above the blue bar as well. So as we can see here, we have 2 particular entries on this early time frame, and none are giving us a perfect entry. That's a little bit unfortunate, right? So we can have the option to either change time frames or do something different. But just for example purposes, I'm going to go ahead and I'm just going to use this example. So what we're going to do is we'll just simply use the very, very first example, or we could use both over here. So let's say we have step 2 checked off. Okay. Let's say we have step 2 checked off and we have our indicators line up. Okay. Now we're going to go to the 3rd and final step right over here. So step 2 is finding that shift in the price, that shift in momentum. And let's go to step 3, which is the final step. The step 3 is to find something known as the FVG entry price, the fair value gap or the imbalanced entry price. The purpose of this 3rd step is because when you are trading inside of the market, your entry is everything. The exact price point in which you enter the market can be a make or break for some traders. So when you are first trading and you're swing trading, you're not going to be as good with your entries because you're swinging the trade. So you're just your main concern is the overall direction in which the market is going to go. But as time passes, as the years pass, as you get better, or as your education gets more specific, you're going to start to learn and develop a need to want to get more accurate and more specific with your entry price. You're going to want to find the opportunity to reduce your drawdown so you're at less risk. You're going to want to find the opportunity to maximize your reward, and also maximize your reward where the trade is more than likely to go into profit sooner than it is later. And that's what the entire 3rd part of this is, the FVG entry. So to help you guys understand the FVG entry, let me help you guys understand what a fair value gap or what an imbalance in the market it looks like. So whenever we are looking at candles, right? Let's take a look at some candle examples over here. And this is going to be really quick. Let's take a look at some candle examples over here. So where one candle closes, the next candle opens. And where the next candle closes, the next candle opens. So let's say these are all, bullish candles. So whenever we're looking at the candles, I want you guys to understand this. Understand the concept of 100% candle coverage. Okay? When we're trading inside of the market, the markets and the dealing desk and the brokers, they like to have a well balanced out market. They don't like slippages and imbalances inside of their order books, inside of the market. They like everything to be balanced, like the theory of supply and demand. So when we look at this candle, every candle needs 100% candle coverage, which means that on the left side of the candle, this candle needs to be covered by the body of the candle or the wick. And on the right side of the candle, there also needs to be coverage, covering the body of the wick. So this candle in the middle needs to be 100% covered on both sides of the candle or overlapping. That is what's 100% candle coverage. Now, in the event that this market has a short wick and this market has a short wick, and there is a gap in between the candle, this right here is known as an imbalance. This is known as an imbalanced candle inside of the market. That's what that means. And what happens is the market does not like an imbalance. So what the market will typically do is the market will come to fill out that imbalance and then take the market in the direction it wants to go. Okay? Take the market where it wants to go. So in order to find our third and final step, let's take a look. It's going to be very simple. Once you found step one, your liquidity zone. Step two, you found your confirmation candle. Step three, you're looking for your entry. And all you got to do is once the confirmation candle closes, that's it. Once the confirmation candle closes, we're going to go to the previous candle wick. And that right there is going to be our specific entry. So let's take a look. If we go right here to that previous candle, that specific candle wick is our entry. And that would be our entry price, 92.359. If we take a look at this particular entry candle, right over here, when this candle closes, we're going to go to the previous candle right over there. And this right there, 92.313, will be our particular entry price. This will help you have less drawdown inside of the market and also help you with your entries. And then simply all you have to do from here is put in your entry, take your trade right to the take profit. And this take profit's about 60 pips. And all you got to do is simply cut the take profit in half or a third. And that's how you will find your 1-to-2 and 1-to-3 risk to reward ratios. Very, very, very simple, ladies and gentlemen. This is the 3-step setup. So let's say we want to come over here and we want to look at, and we have multiple pairs. We have done phenomenal this month. But let's take a look right over here, right? Let's take a look at our UJ trade. We went ahead and we found our liquidity zone. And then once we found our liquidity zone, we came right over here to the market. And then we dropped down to a lower time frame, right? We dropped down to a lower time frame. This was a smaller time frame, but you know, whatever the case is, we drop down to a lower time frame. And once we're on our lower time frame, we're going to look for our confirmation candle. So let's say we have our confirmation candle here and we have one there as well. Step two, you find your confirmation candle. Now let's say everything checked out on this particular example on this candle. The third thing that you want to do is simply, once this candle closes, is come right to the previous candle's wick. And you want to simply put it right over there. And this is going to be your entry. Sometimes the market will not, fill out that wick, but many times you will find yourself in really, really good opportunities inside of the market with this. And as long as you guys, and we're going to get ready to wrap it up, you guys can get, if you guys like this, you guys can get more value and more education on some of our live sessions on IM Mastery Academy, where you will learn the strategy in depth, but it's a simple 3-step strategy. So every day we open up the market, we browse through our pair selections, we look for some of these trading opportunities. As an example, let's take a look over here. This will be the last example. Let's take a look at this GBP CAD in real time, right? This is the entry line. This is the entry. So what are we going to do? we're going to look right here where the market pulls back to these zones. And we're going to be looking for breaks in structure. And as you can see here, we have phenomenal breaks in structure. We're going to come to our highest candle, and we're going to come to the candle right before that, and we're going to draw up a zone. Very simple. There goes our liquidity pool standing right there at our entry. We're going to want to make sure that the market has came in that entry area. We're going to want to reduce the time frame to a lower time frame. Now you see this one come all the way out. The market had to hit the entry. So this one's a little bit on the opposite side. From here, you're then going to look for your confirmation candle where everything is lined up for you. You want to color code, make sure everything is red, either on that one or on the second one. Once everything is lined up, you're going to simply come to the wick right before that, and that's your entry. Come to the wick right before that, and that is your entry. This is how we're able to use this. Family, if you guys can master these 3 steps in the financial markets, I cannot guarantee you anything because your work ethic is not guaranteed, but I can promise you guys that you will find yourself in a much, much better position inside of the market. So this is how we mix 2 of the most phenomenal concepts in the world. This is the strategy that I like to call my own here inside of the market. And it's been my absolute pleasure to be able to show you guys this particular strategy. So if you guys like this, if you guys like the Smartmonic strategy, feel free to drop a 111 inside of the chat box if you got value on this strategy over here, family. Okay, so what we're going to get ready to do is we're going to get ready. Was this a little bit intense? Don't worry. Tomorrow, you have Mr. Brandon Boyd and Dr. Lee. They keep it super simple, and they are phenomenal traders and educators here at I Am Mastery Academy. So if this particular trading style, this particular strategy was not for you, don't worry. That's why we have the 25 days of giving, where you're going to meet more educators, you're going to see more strategies, and you're going to learn about more academies. So if this one didn't hit for you, don't worry. There are more for you guys to get access to. So as we get ready to wrap this up, I just want to remind everybody here that if you are not yet a part of I Am Mastery Academy, you're more than welcome to get connected with the person.
Λοιπόν, έχουμε φτάσει στο τέλος της σημερινής εκπαιδευτικής ημέρας. Λοιπόν, παιδιά, όπως είδατε σήμερα αναλύσαμε μια στρατηγική που δεν την ξέρω ούτε εγώ, τώρα την έχω μάθει. Institutional Trading και Smart Money Concept έχω ξαναδιαβάσει, μελετήσει. Παρ' όλα αυτά το συγκεκριμένο τρόπο εκπαίδευσης της συγκεκριμένης στρατηγικής και εφαρμογής πρώτη φορά την βλέπω και εγώ. Τέλεια. Λοιπόν, παιδιά, σήμερα μάθαμε για το Smart Money Concept και το πώς μπορεί μέσα από τον αλγόριθμο της Ακαδημίας και το Harmonic Scanner να σου δίνει entry, να σου δίνει σημεία τα οποία εσύ μπορείς να μπεις στο market, σημείο το οποίο να βγεις από το market σε περίπτωση που κάτι δεν πάει καλά και πού να πάρεις το κέρδος σου, δηλαδή το take profit σου. Η συγκεκριμένη στρατηγική, μισό λεπτό θα κάνω share screen. Share screen και νομίζω με βλέπετε και με ακούτε. Τελεία. Η συγκεκριμένη στρατηγική, παιδιά, είναι συγκεκριμένα 3 βήματα. Ωραία, μισό λεπτό να το πάρω στο λεπτό που εξηγούσε τα βήματα ο καθηγητής. Αυτό είναι. Λοιπόν, είναι 3 βήματα. Πάμε να τα εξηγήσουμε όπως τα δείχνει και ο καθηγητής για να πάρετε κι εσείς μια εικόνα. Λοιπόν, το πώς δουλεύει γενικά η συγκεκριμένη στρατηγική και εγώ όπως τώρα την έχω καταλάβει, θα ανεβάσω το βίντεο, εννοείται, που μπορείτε και εσείς να το δείτε. Η στρατηγική είναι 3 βήματα. Λοιπόν, σου λέει ότι, για παράδειγμα, έχουμε μια οικονομική αγορά η οποία ανεβαίνει προς τα πάνω. Εντάξει. Εμείς ψάχνουμε να βρούμε πού είναι τα λεφτά. Με λίγα λόγια, μέσα σε μια οικονομική αγορά υπάρχουν οι retail traders και τα whales, οι φάλαινες, να το πούμε, τα πολλά τα λεφτά, τράπεζες, χρηματοοικονομικά ιδρύματα, αυτοί που έχουν τα εκατομμύρια. Ωραία. Εμείς θέλουμε σαν retail traders να δούμε πού έχουν βάλει αυτοί τα whales, αυτοί οι φάλαινες, τα πολλά τα λεφτά, για να μπούμε και εμείς μέσα στο trade μαζί τους. Ωραία. Και εξήγησε ο καθηγητής ότι Όταν για παράδειγμα έχουμε ένα uptrend, το ίδιο ισχύει και στον downtrend, έτσι. Για παράδειγμα, ανεβαίνει το market προς τα πάνω και πέφτει προς τα κάτω. Κάνει μία άνοδο και κάνει μία πτώση. Σου λέει ότι για να βρεις εσύ πού είναι τα λεφτά, θέλεις για αρχή να σπάσει το level αυτό. Ωραία, να σπάσει αυτόν εδώ το κομμάτι. Μόλις η αγορά σπάσει το level προς τα πάνω, εσύ θες να περιμένεις το market να κάνει επιστροφή και να μπεις στο trade εδώ πέρα που ξεκίνησε η κίνηση. Για ποιο λόγο? Γιατί εάν από εδώ πέρα έκανε την κίνηση και ανέβηκε προς τα πάνω, σημαίνει ότι σε αυτόν εδώ πέρα το σημείο οι τράπεζες έχουν βάλει orders, να το πω έτσι. Ωραία. Άρα εμείς τώρα τι θέλουμε να κάνουμε? Θέλουμε, αφού βλέπουμε το market να σπάει προς τα πάνω, θέλουμε το market να επιστρέψει προς τα κάτω και εμείς να βάλουμε order για αγορά σε αυτόν εδώ το σημείο. Οκ. Άρα εδώ πέρα βλέπετε παιδιά ότι με αυτόν τον τρόπο εσύ μπορείς να ξέρεις πού έχουν τα λεφτά τους οι τράπεζες και πού μπορείς εσύ να βάλεις όπως οι τράπεζες τα orders. Αυτό είναι το νούμερο 1, δηλαδή να αναγνωρίσεις, όπως το λέω εδώ, find zone liquidity. Να βρεις δηλαδή πού υπάρχουν τα λεφτά. Το δεύτερο σημείο ήταν να βρεις το entry σου, να βρεις find shift in momentum, δηλαδή να δεις πού άρχισε η κίνηση. Γιατί μέσα στο trading κάτι που μου αρέσει πάρα πολύ είναι ότι πριν κάνεις οτιδήποτε, πριν αγοράσεις ή πουλήσεις οτιδήποτε, πρέπει να έχεις κάποιες επαληθεύσεις, κάποια confirmations. Και στο trading, για παράδειγμα, το δεύτερο βήμα που λέει ο καθηγητής εδώ πέρα, σου λέει ότι όταν φτάσει το market σε αυτόν εδώ το σημείο, να αλλάξω χρώμα, όταν πλέον το market έρθει σε αυτόν εδώ το σημείο, τότε σου λέει ο καθηγητής, θες να δεις ότι άρχισε όντως το market να ανεβαίνει, δηλαδή σου κάνει candlestick, δηλαδή momentum candle, δηλαδή αρχίζει η κίνηση προς τα πάνω. Μόλις δεις εσύ το candlestick, για να έχεις περισσότερη σιγουριά ότι όντως θα συνεχίσει το market να βγαίνει προς τα πάνω, η στρατηγική αυτή σου έχει βάλει κάποια indicators, κάποιους δείχτες. Λοιπόν, σου έχει βάλει εδώ πέρα κάποιους δείχτες που σου λένε αυτοί οι δείχτες ότι εάν όλα τα χρώματα είναι τα ίδια, για παράδειγμα, μπλε candle για άνοδο, ο δείχτης εδώ πέρα να είναι μπλε, η γραμμή η μπλε να είναι πάνω από την κόκκινη και η γραμμή μπλε να είναι πάλι πάνω από την κόκκινη εδώ πέρα. Άρα όταν αυτά τα 4 σημεία δένουν μαζί, τότε εσύ έχεις πολύ μεγαλύτερες πιθανότητες να επαληθεύσεις ότι σε αυτόν το σημείο το market θα ανέβει προς τα πάνω. Ωραία. Άρα στο δείχνει και η Ακαδημία αυτόν, η στρατηγική ίδια στο δείχνει, δηλαδή δεν χρειάζεται να κάτσεις εσύ να το ψάχνεις. Άρα, step νούμερο 1, βλέπεις πού είναι τα λεφτά, δηλαδή περιμένεις το market να ανέβει προς τα πάνω, να κάνει πτώση, να σπάσει αυτόν εδώ πέρα το σημείο που εξηγήσαμε και περιμένουμε το επόμενο σημείο όπου είναι εδώ κάτω. Εδώ κάτω είναι για το λόγο του ότι το market, τα whales έχουν βάλει τα λεφτά τους εδώ πέρα, άρα εμείς αναμένουμε το market να πέσει εδώ κάτω. Μόλις πέσει το market εκεί κάτω, περιμένουμε να δούμε momentum, shift in momentum όπως το είπε ο καθηγητής και οι δείχτες, τα indicators δηλαδή που εξηγήσαμε μόλις τώρα, να είναι όλα για άνοδο ή για πτώση, ανάλογα αν κάνουμε sell, έτσι. Μόλις το δούμε αυτόν το zone και αυτά τα candlestick, τότε έρχεται το entry. Πρόσεξε τώρα, εδώ πέρα μπορεί να είναι λίγο πιο complicated, θα σου το εξηγήσω, γιατί η αλήθεια για να μπορείς να το εξηγήσεις στο συγκεκριμένο κομμάτι πρέπει να καταλαβαίνεις από λίγο trading. Αν είσαι καινούριος και μπερδευτείς, μη σε αγχώνει, θα προσπαθήσω να το εξηγήσω όσο πιο πολύ γίνεται. Λοιπόν, το τρίτο σημείο είναι το entry. Ωραία, σου εξηγώ ο καθηγητής και σου λέει ότι όταν ένα candlestick ανεβαίνει προς τα πάνω, κάποιες φορές μπορεί να δημιουργήσει ένα wick. Τι είναι το wick? Το wick είναι όταν η αγορά π.χ. είναι στο 10, έρθει στο 20, ανέβει στο 25 και τελικά αποφασίσει ότι θέλει να κλείσει στο 20. Π.χ. αγοράζω αυτήν την πέννα. Εντάξει, η τιμή της ξεκίνησε στα 10, ο κόσμος αγόραζε, πήγε στα 25, αλλά τελικά στα 25 άρχισαν να πουλούν κάποιοι να βγάλουν λεφτά και έκλεισε στα 20 ευρώ. Εντάξει. Λοιπόν, άρα στα 20 ευρώ έκλεισε εδώ πέρα το market. Το επόμενο candlestick θα ανέβει, θα είναι συνέχεια του να βγει προς τα πάνω. Οκ. Λοιπόν, ανεβαίνει το επόμενο candlestick προς τα πάνω. Ξανανεβαίνει το candlestick προς τα πάνω. Εν τω μεταξύ, να σημειώσουμε εδώ πέρα ότι τα candlesticks αυτά, αν το δούμε σε γραμμές, είναι αυτό το πράγμα. Πέρα το κάνουμε διαφορετικά. Τώρα, γι' αυτό είπα πρέπει να ξέρετε λίγο από trading. Λοιπόν, όταν δεις τα candlesticks, στην ουσία είναι αυτό το πράγμα. Τι είπαμε στην αρχή, θέλουμε να σπάσει εδώ πέρα, θέλουμε να έρθει εδώ κάτω και να προχωρήσει το καθεξής. Άρα, ο καθηγητής σου έλεγε ότι... Μισό λεπτό. Λοιπόν, που λες, άρα, ο καθηγητής έλεγε ότι ανεβαίνοντας τα candlesticks προς τα πάνω, δημιουργούν wicks. Εντάξει, τις περισσότερες φορές. Άρα, εσύ, λέει ο καθηγητής, θέλεις να βάλεις το entry σου σε αυτόν εδώ το σημείο που είναι το high price, η πιο ψηλή τιμή. Για ποιο λόγο? Γιατί από εδώ πέρα που είναι αυτόν το week, σε αυτόν το week έχει δημιουργήσει μέσα στην αγορά αυτό που λέμε imbalance. Αυτόν εδώ πέρα το κενό είναι imbalance, γιατί θέλουν οι οικονομικές αγορές, τα whales που έχουν βάλει τα λεφτά τους μέσα στο market να καλύψουν αυτά τα orders, αυτές τις τιμές. Άρα το market έρχεται να καλύψει αυτόν εδώ πέρα. Γι' αυτόν βάζουμε το entry μας εδώ πέρα. Άρα έτσι ώστε όταν το market ανέβει πάνω, ξαναπέσει κάτω και το δεις το market να πέφτει, εσύ βάζεις εδώ πέρα το order σου by limit, okay? Και περιμένεις το market να έρθει εδώ πέρα, να ενεργοποιηθεί το trade σου για να πιάσεις τη συνέχεια του market. Ωραία. Για αυτόν το τελευταίο ίσως λίγο να σας μπέρδεψε, είναι λίγο πιο advanced. Ναι, το καταλαβαίνω. Γι' αυτόν και κάνουμε μαθήματα κάθε μέρα για τη συγκεκριμένη στρατηγική, για να μπορέσεις να κατανοήσεις πώς δουλεύει όλον αυτόν. Γενικά η όλη εικόνα και η όλη ιδέα της συγκεκριμένης στρατηγικής είναι να μάθεις πώς σκέφτονται αυτοί που έχουν τα λεφτά. Δηλαδή, αγόρασες αυτόν το σημείο, ναι, άρα εγώ θα πάω να αγοράσω εκεί που έχει βάλει τα λεφτά του. Ωραία. Λοιπόν, παιδιά, αυτό ήταν το σημερινό μάθημα. Ξανά ευχαριστώ όλους που ήσασταν μαζί μου. Ελάτε αύριο στην επόμενη μέρα που θα κάνουμε, την τρίτη ημέρα που θα έχουμε το μάθημα, γιατί θα μιλήσουμε για time-based trading, μικρής διάρκειας trading. Σήμερα μιλήσαμε για day trading, swing trading. Αύριο θα μιλήσουμε για scalping, για time-based trading. Okay. Λοιπόν, αυτό ήταν το σημερινό μάθημα. Ευχαριστώ όλους που ήσασταν μαζί μου μέχρι εδώ πέρα. Γράψτε μου τα σχόλια σας, απορίες. Στείλτε μου ένα μήνυμα. Όποιος ενδιαφέρεται για περισσότερα μαθήματα και λεπτομέρειες για όλα αυτά, μπορεί να μου στείλει ένα μήνυμα. Μέχρι τότε, παιδιά, ευχαριστώ πάρα πολύ όλους. Καλή συνέχεια σε όλους. Καλό βράδυ. Bye bye.